bond was the first subnational issuance to be undertaken by way of a book build. So far, Lagos State has redeemed 107.5 billion naira of its outstanding bond, creating room for further issuance to help develop the state. And to the markets now. The Nigerian equities market opened the first trading session of the week positive with a number of first quarter earnings released. The all-share index, the equities market advanced by 2.21%, the largest this month, to close at 25,747.05 points. The market capitalization closed at 8.90 trillion naira. Monday's bullish performance swung the month-to-date return into the green and reduced the year-to-date loss to 4.20%. The total volume traded increased by 23.40% to 111.75 million shares, valued at 1.40 billion naira and exchanged in 3,054 deals. The NASD OTC market, the unlisted securities index dropped 1.52% at 608.17, while the market capitalization closed at 411.56 billion naira. In all, a total volume traded was 61,200, valued at 8.75 million naira in just 3 deals. Another fixed income market, investors were upbeat in the Treasury bills market, with average yield contracting by 28 basis points to 18.24%. At the FMDQ OTC market, security maturing May 25, June 8, July 20 and June 29 recorded the highest deal in that order. The total number of deals traded stood at 902 and the value closed at 227.30 billion naira. Also, the bond market closed on a bullish note as average yield contracted by 11 basis points to 16.70%. Demand occurred across board, with yield at the short, mid and long end of the curve contracting at the FMDQ OTC market. Securities maturing March 18, 2036 was the highest in value, with a price high at 79.17. The total value of the FGN bond traded was 10.35 billion naira in 88 deals. Well, let's look at the market for yesterday. That was Monday. Being joined by an investment analyst at ARM Securities, Philip. Anyway, thank you very much for joining us.
Thank you.
Well, we have seen the all-share index recorded yesterday. Now, aside from the earnings reports, we had Lafarge, which seemed to have driven the market that far, and of course, Stanbic IBTC. What are the other factors that drove sentiment at yesterday's trading in the equities market?
I think the market has responded positively to policy changes, especially with the opening of the new FX window for foreign investors and exporters. And also, essentially, we've seen CBN actually more or less supply the market, keep the market supplied of FX, both at the Bureau de Change and, of course, at the other avenues, talking about the SME's intervention so far. I think that has been broadly positive. And as you also noted, that earnings across a number of companies that have released have been very positive. Stanbic was able to grow its earnings substantially, essentially. It's covered that Stanbic's earnings already about 35% of projected for full year 2017. And of course, Lafarge, on the back of higher prices, they were able to grow revenue strongly. Now,
talking about the various CBN's intervention, the latest being the investors and exporters FX window. Now, what does this mean for the domestic market as well as the currency?
I think you're going to see more trade for invisible items. As you know, among the items that listed, they say that you can actually trade more or less, get FX for to meet more or less repayment of loans and interest as well. And also, you can also use it for dividend and capital repatriation, essentially. And these are major concerns for a lot of foreign investors coming into the period. So I think that's some sort of a reprieve. Beyond that, it's going to allow sort of trading, essentially. But then it's still crude relative to the developed fully float markets that we see across the globe. I think as far as the rates, rates they continue to trade at below parallel market, I think we are likely going to see that subsist, more or less the patterns of CBN is likely going to allow it to play out continuously. But when it's beginning to trend above parallel market, then you may begin to see some concerns on that front. I think yesterday the Naira was priced at about 378 Naira to the dollar at the market.
Now, okay, what impact do you see this having on Naira assets, for instance?
I think broadly, CBN's intervention have seen Naira appreciate, especially at the parallel market end. That's positive essentially for Naira assets. Essentially, what that speaks to is some sort of confidence development. People begin to build more confidence for Naira assets. You may see if the CBN is able to actually sustain it for a couple of months, you may see foreign investors begin to look towards this direction. Essentially.
All right, looking at some of the earnings that came in yesterday, quite a number of them: Lafarge, Stanbic, IBTC, Ashaka Cement, and quite a number of them. Do you foresee a more positive first quarter report? Because I'm sure some will be tripping in today.
Yeah, we foresee a more positive first quarter report, particularly for the industrials. Like, you know, Lafarge was supported by the price increases. I think they did two in Q1 in the first quarter and one other one in Q4 2016. So it was broadly supported by that price increase. So for the likes of Danksem and other players in the sector, you expect a strong performance from them. And another thing is that they've been able to actually manage their costs lower, talking about heavy investments in energy flexibilities. For Stanbic and other banks, I think the major thing is higher returns from trading income. Given the new windows that are opening up, you discover that a lot can be obtained from trading income, essentially, especially forex trading. I think for Stanbic, there was also positives from fixed income trading, and that was the main support for the results.
Okay. Now, looking at the fixed income market yesterday, we saw the bullish trend also. So what would you also say? Is it all about the FX that drove the sentiment recorded yesterday? I
think for the bond market space, investors just largely took position ahead of heavy maturities we're expecting in the market. I think for fact, we're expecting about 220 billion, and then for bond maturity, we're expecting about 480 billion. So in anticipation of that, I guess investors just took positions to more or less take advantage of yields when they trend lower upon the arrival of those maturities.
All right, thank you very much for your time, Philippe Anyebe, investment analyst with AR Securities. Thank you very much for joining us. Well, we'll take a quick break now, and when we return, we'll look at the commodities market. Do stay with us.